The four-step method to high-performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high-performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. A short video just highlighting again repeating opportunities on any instrument in any session. Now yesterday I posted a screenshot that a lot of traders asked questions regarding the A++, the A++, and the A+ setups. And I talked about, I like to look for shorting opportunities. Now, different instruments, I'm not going to necessarily look to get in front of runaway freight trains or rocket ships. I'm not trying to catch the highs or catch the lows, but we're looking for specific behaviors from the daily time frame. The daily time frame, because I'm targeting a daily range. Looking for opportunities on the daily time frame, the same as a position trader would, taking a position on the higher time frame, placing an order, a stop loss, and either a take profit level or having a thesis behind a measured move on a higher time frame. Now I'm just applying that same approach, but I'm using that to identify the best instruments for me, targeting them in New York or the Asian sessions. And an excellent question from a trader was, how do you gauge A+, A++, or A++? Well, it has to do with the day of the week. We've gone over that in our previous videos. The simple repeating Monday, Tuesday, Wednesday, front side of the week, day 1, day 2, day 3, template, reset. Wednesday typically can be a signal day. There are two types of trades on a day 3, trend trades or reversal trades. Now again, I'm looking for reversals on markets that break out or close in breakout. Now we'll talk about that in a moment. Again, we'll review a very, very simple understanding. Wednesday resets heading into the backside of the week, day 1, day 2, day 3. Closing out the week, Wednesday is the midpoint. Friday is the closing range of the week. We've talked about that previously. We can, if you want to understand that better, put up a weekly bar chart. Look at your weekly bar charts, an open price, a high price, a low price, and a closing price. And then a new week starts again. Week 1, week 2, week 3, week 4. New month, new timing cycle. The same thing happens again and again and again. I'm looking for the same signal. Now traders can look for any signals that they want. Daily signals. Markets only do 3 things. Traders do all kinds of things. I'm looking for markets that close in breakout, multiple days of breakout, and then am I already in an existing first red day template, so we can have markets that pump up and close in breakout that are already breaking down for continuation trades. If traders are looking for trades in the long direction, we can have markets that are already in a first green day template. Go back, watch the higher time frame videos. New month, new timing cycle. What type of template are we in? Inside days. Now I've talked to this. There's an entire playlist on each one of these on this channel. Inside days can be after breakouts in markets on the front side, that an explosion, a coil, and a continuation in a trend trade opportunity. We can see markets that will break out and it's an exhaustion back into an existing higher time frame selling or buying level on the daily time frame, trapping traders on the wrong side and reversing. We've talked about what a false break looks like. When a market is a false break, it breaks out and reverses quickly. It does not allow traders to stay in the money, whereas a trend trade will break out and stay outside. It may stop hunt back inside before continuing the trend. We saw several examples of that yesterday on currency pairs on Tuesday, day 2, which typically expands the range. So let's review a really simple concept for me. This is what I look for. I'm looking for the same signal. I talked about this in the last video. A market that closes in breakout, because markets only do 3 things.
Markets only do three things. I'm basing this on signal days from the daily charts. So when traders have smaller time frame charts up and they've got 5 charts, they're looking for something moving, and then they say, well, how did you get that? Remember, I'm only looking for certain signals because I want to target the A triple plus, the A double plus, and the A plus opportunities. I'm looking for reversals. Doesn't mean that every single trade that I take is going to be a reversal trade. I'm looking for specific signals to alert me to a higher time frame opportunity. And then how does price set up on the day? Because markets only do 3 things. They break out and they succeed in their breakout, where we can see multiple days of breakouts continue. We can see markets get to an extreme, close and breakout, and fail and reverse back inside. An ACB opportunity, whether it's a session trade because it's a pullback, it's still a 90-10 session opportunity, or it can be a daily range where it's going to reverse and not come back that day. Or we can be in a larger, higher time frame trading range and still see A triple plus, A double plus, and A plus opportunities. We've gone over examples of that on different instruments where the entire month may be in a high-low range, but we can still see markets closing in breakout at extremes, whether it's on the upside or the downside, trapping traders on smaller time frames down low and reversing quickly. Markets only do 3 things. The question for every single trader is, what are you doing when you're behind the keyboard, behind the screen? You can have all kinds of information. The more information that you have, the more variables that you have to deal with. Now, my thought process is this: markets only do 3 things. So I need to target one specific repeating opportunity on any instrument, the A triple plus, the A double plus, or the A plus opportunity. I'm looking for one signal, and then whether or not price sets up into my timing window, day 1, day 2, day 3, reset, day 1, day 2, day 3. High impact major red news can affect that. Now, traders do all kinds of things: soups, gaps, arrays, discounts, premiums, blocks, pushes, sweeps, runs, draws, caught the low, caught the high, caught the move, Wyckoff, Taylor, Gann, Elliott wave, Toby Crable, algorithmic theory, etc., etc., etc. Now, I'm looking for one repeating signal, any market, any instrument, and then whether or not it sets up into my session. And why is that? Because it's simple, repeatable, and scalable. Keyword, simple, and it applies to any session and any instrument. Obviously, I like to look at markets that are going to potentially operate better in the US session. I've talked about metals in the Asian session. We'll talk about that in a moment, a very specific repeating opportunity that can happen on any market. But metals have repeating behaviors. Now, I've talked about multiple days of breakouts. One of the signals that I tend to look for are multiple days of breakouts. And not just to position myself in front of a breakout, but specific behaviors of price, timings, levels, behavior of price. Now let's go back to the original chart we talked about. You'll notice, as we've talked about repeatedly, markets closing in breakout. Bring an instrument up on our watch list. Is that instrument already moved? I come to the screen the next day, I've got instruments on my watch list that closed in breakout, or they had an inside day, or they were a first red day, and I'm looking for a market to close back in breakout. Why? Because markets only do 3 things. So I'm just looking for signals. Markets that close in breakout offer a reversal. They break out again. We have a market that now is potentially offering us an A double plus. We have a market that's broken out and it's pulling back. It's an A plus session opportunity. We have a market that's broken out, pulled back, continued to break out again, multiple days of continuation, and an A triple plus, a high of week to low of week opportunity. Now, the same thesis applies in the long direction. What traders do in between on smaller time frames, catching moves, is up to them. It's discretionary trading. When traders get behind closed doors at the keyboard, they will do all kinds of things. They'll catch moves. They'll caught the high, caught the low, caught the move. They'll do multiple things. Other traders are working on smaller time frames with the same type of setups on a fractal level. I've talked about my friend Steven. I've talked about the understanding that there are only 2 setups. Only 2 setups, no matter if you trade soups, arrays, discounts, premiums, gaps, sweeps, draws, runs, Wyckoff, supply, demand, Elliott wave, whatever you want to trade is entirely up to you. But there are only 2 setups, a buy setup and a sell setup. And we can see 2 variations, a buy low V bottom or a sell high A top, or a dump, coil, and pump. And my favorite, pump, coil, and dump. Now here's the next easy part. Remember what I mentioned earlier. Simple, reproducible, scalable. Daily signal. Is it a 90-10 setup into my timing window? Yes or no? I'm not in the middle diddling, looking for soups, gaps, pushes, hunts, minutia. Daily signal. 2 blue lines. Become a master of 2 blue lines. Any system, any method that you use is based on 2 levels somewhere when the trade is going to be entered. There are only 2 setups, buy setups and sell setups. I'm looking for where are my 2 blue lines. Not any minutia, no diddling, no catching moves. Signal day, repeating the same setups over and over and over again. So in order to do that, what is the signal? What is the signal? A triple plus, the A double plus, and the A plus opportunities. My question again is, what are you hunting? Are you looking for trades every day on something that's moving, or one market that's moving, trying to catch something? Or do you have a rinse and repeat model to build your trading business on? Let me just identify with traders that what you do is entirely of your own decision, your own discretion, hence the term discretionary trading. When you get behind closed doors and you're behind the keyboard and you have the mouse in your hand, you are the chief mouse clicker. Now, I know traders will talk about the markets. They know everything about the markets. They're geniuses about the markets. And some traders have a 90-10 winning plan that they stick to. Other traders have a 90-10 plan and they can't stick to it. Other traders have no plan and they're doing random, impulsive, emotional, and potentially self-sabotaging, degenerate gambling type of things. They win some trades, they lose some trades, they blow up their trading account, and they start again. Win some trades, lose some trades, system jump, blow up the account, start again. Trading doesn't work. The trader is the only variable in the market. The trader is the only variable. It's not soups, it's not gaps, sweeps, hunts, runs. All markets do the same 3 things. All markets do the same 3 things. Traders do all kinds of things. So we're looking at a chart of the gold daily. We have broken out Monday, day 1. We were in breakout already, multiple days of breakouts. We went over this in the previous video. New month, new timing cycle. The month broke out. It was already in breakout, closing out the month in a higher time frame geometrical pattern. A market that was in breakout and went into consolidation. We had a double inside month. One of my mentors, Peter Brandt, classical charting. I talk about range expansions. The higher time frame range expansion. We saw a 100% expansion of the range on the daily time frame. Now understand, we're not putting a limit on what a market can do, but a new week, new timing cycle, we've already hit that measured range expansion from a geometrical consolidation, a rectangle. We already have multiple days of breakouts. We saw the A plus reversal, the A double plus reversal, a daily range. So we had day 1, day 2, continuing to break out in the US session. We had 2 blue lines, level to level. Paul Tudor Jones, everything gets destroyed 100 times faster than it is built up. Escalator up, elevator down. So not looking for that every day. Monday's the opening range. We let the market set up. Day 2 expanded the range and closed in breakout. We have multiple days of breakouts. We're at all-time highs. Explosive opening range were multiple days of breakouts.
We close in breakout again on Tuesday, day 2. It's an FOMC Wednesday. How does price set up into our timing window? First thing we do is draw 2 blue lines. Now, it's just a simple understanding, really. We have a market that pumped up on Monday, day 1, closed in breakout, but it continued to break out higher. Every trader can draw 2 blue lines where the market has broken out, where there's low-hanging fruit underneath, and where that market may potentially target as a take profit level. There are only 2 setups, a sell high setup or a buy low setup. Now, traders from the master class will recognize that when we get a coiled market, you can only trade in one direction. So first thing is, where are my levels? We already have a market that's closed in breakout. We have a peak formation made into our close back into traders that were short in our New York session. They were in the money, just common sense. They're in the money, so the market is auctioned back up to where the money is. So if they didn't lock in their profits, guess what? They're either stopped out with no profits, stopped out with trailing stops being hit in a market that continued to make higher highs and higher lows. We have closing price from Monday's opening range acting as a support level, but we also have our simple basic pump coiled into our multiple time frames for the explosive dump coil and continuation back into the low-hanging fruit from breakout traders in Monday's New York session. Now remember, I want you to think simple. There are only 2 setups, day 1, day 2, day 3, trend trade, reversal trade, pump, coil, and dump, or a top. We have our pump, coil, and multiple time frame coil driving that move for the explosive collapse, a 3-day setup. Page 31 in the playbook. Now, the possibility exists that we can have multiple signals and then looking at which instrument offers us the cleanest or the best setup that we resonate with as traders. So we can have multiple instruments giving us signals, putting them on our watch list. And one of the questions I often get is, well, how do you choose one? And my response to that is just choose one. Just choose one and execute the trade. It's just a trade. And traders can randomly look through their charts because hindsight pays. The same signals, the same opportunities happen again and again and again. Any instrument, any market, indexes, currencies, energies, cryptos, any instrument, and then whether or not it sets up into our session. Markets break out, they go into consolidation. We have multiple days of breakouts. We have breakout pullback, continuation, and reversals. Multiple signals, days of the week, opening range. Day 2 expands the range. On the backside, we can see day 2 reversals. What signal are you hunting? Monday closed in breakout, and that was our 3rd day closing in breakout. New week, new timing cycle. Now, a really simple thing for traders to get into the behavior of is drawing 2 blue lines. Everything else to me is smoke and mirrors. Traders are counting little bars, pushes, gaps, sweeps, hunts, blocks, runs. All I'm looking for is the daily close, New York closing charts. Market goes a little bit higher, redraw our 2 lines. So we saw reversal opportunities on gold from all-time highs in the New York session. We've talked about the 10 a.m. club. New York equity markets open at 9:30. All the 10 a.m. club is listen closely. There's no science behind that. It's a new 4-hour rotation. So we had a session nail and bail, 2 blue lines in our New York window for a high of month reversal opportunity from level to level in the New York session. An example of locking in the money and walking away. Whether or not traders took this trade is entirely up to them. Again, what setup are you specifically hunting? What signal did you get? How did price set up into your timing window? And is it an A triple plus, an A double plus, or an A plus opportunity? We're on the front side of the week. It's a session reversal opportunity, an A plus 90-10 parabolic reversal setup. Okay, a moment ago we said there were only 2 types of
setups for buying and selling A top or pump, coil, and dump, or V bottom, dump, coil, and pump. Now we have a higher time frame pump, coil, and dump opportunity, but on the smaller time frame, all we have is an A top, pump, dump, reversal. Into our timing window, the 10 a.m. club for the parabolic collapse. Keeping it simple, repeatable, and scalable. Nothing else. Looking for the same setups over and over and over again. Now the best part is day 1, day 2, day 3, we now have a first red day signal. First red day, page 58 in the playbook, a market that closes below the open. Just because it's a signal day doesn't mean that we get in. All it is a signal. This is where traders fall down a lot. They go, well, it was a first red day, but how did it set up? What is the nature of the setup? We had two potential signals now. We have multiple days of breakouts. Day 1, day 2, day 3. We have a market that has given us an A+ session reversal trade. Day 1, day 2, trading into day 3. Two types of setups on a day 3, trend trades or reversal trades. Monday's the opening range. We have two blue lines. Heading into our session, we can draw another blue line. The last high made in our New York session. Now the way that I dummy proof this is I use the coil. Traders from the masterclass will understand you cannot trade against the coil. Multiple days of breakouts, a first red day signal, and then our coil on our smaller time frame. And this is what I repeat to traders. A scalable opportunity that, as Paul Tudor Jones says, will destroy things 100 times faster than they're built up. There's nothing sciencey, confusing, subjective. It's very simple. Signal day, and then do I have my pump, coil, and dump, or my A top setup in my timing window? Simple, scalable, repeatable. This is a trade setup that significantly can grow a trader's account. Significantly grow a trader's account. Now, we talked about Linda Bradford Ratchke saying you only need one pattern to make a living from trading. We've gone over this ad nauseum that markets only do 3 things. But the trader themselves is the variable. They do all kinds of stuff. I'm looking for simple, repeatable, scalable. Put instruments on my watch list. Is it set up into Asia if I'm looking at a metal? Or in the New York session, do I have my setup? Has it already left the station in Asia? Currency pairs left the station in London. I'm not interested. I'm going to look at another instrument that's on my watch list because I'm looking for the same repeating setups over and over and over again. Is it an A+? Is it an A++? Is it an A++? Now, the best part about this is that whether traders agree, disagree, have different theories, different beliefs, different experiences that they have, that they bring to the market to trade differently, is irrelevant. It means nothing. It means nothing at all what any other trader thinks. The only thing that matters is whether or not you yourself, the trader, number 1, have a money-making edge, and number 2, stick to your plan and execute that edge if and when it presents, and number 3, don't do any other random, impulsive, emotional, potentially self-sabotaging, degenerate gambler type of things that can destroy the good results that you do when you execute the money-making setups. Everything else, as Gordon Gekko says, is just conversation. Agree, disagree, argue all you want means nothing. Once you shut the door today, and I'll close on this, and you get behind the keyboard at the computer with the mouse in your hand, the only thing that matters is what you, the trader, yourself, are going to do. I'm looking for rinse and repeat, the same signals for the same setups over and over and over again. Keep everything simple. then you can repeat it and you can scale it up in size. Have a great day, traders, and may the markets go with you.